This is our Forex blog for October 25th, 2012. And like we do most days, we want to buy the strongest currencies versus the weak and sell the weakest ones versus the strong. This is our new build your own trend histogram, which now incorporates both the real-time trend strength and also statistically daily, weekly, and monthly trend. This is what the old one looked like, where you'd have the real-time trend on the top, 15-minute trend, hourly trend, daily, weekly, monthly. And a lot of traders found it difficult, especially when multiple different time frames have different trends. So by averaging it all together, it makes it very easy to use. You can see, let's scroll back. I'm doing today's blog video a little bit late because I'm spending all my time working on our trading signals. Today you can see without a shadow of a doubt that the pound was the strongest, the yen was the weakest. So basically, in a nutshell, you want to buy the strong pound versus the yen, or the strong New Zealand versus the yen, or the strong Australian versus the yen until about 10. It's that simple. Alright, so basically you're looking to buy this on pullback trades or sideways rectangle breakouts. It was pretty clear right at midnight that this thing broke out, took off. You can see our intelligent trailing stop got pretty much the entire move. And because it's gone up statistically too much, our counter trend sell signals are starting to give sell signals. This is the next buy trade here. You would, anytime you see the market go sideways with a rectangle formation, you want to buy a breakout as long as it goes sideways for at least 2 or 3 hours. That particular trade pattern is not in our trade system yet, but if it did, when I get around to putting that particular trade in there, it would give a buy right here in this area right here. Now, if you see a rectangle pattern of as little as 30 minutes to even an hour, that works, but not at these extremes. The upper containment bands, especially the green 3.0 band, most days when price goes above there, it reverses. This is one of those outlier days where you have one currency with extreme strength and another one with incredible weakness, and that trend just continued and continued. The majority of the time, statistically, probably 80-90% of the time, when it hits this green band, it's going to reverse within 15 to 25 pips above it. And usually it's going to reverse back down 20-30 pips. That's why you have all these sell signals here. Today it was one of those outlier days, so you have to be aware that some days the market does what normally it doesn't do. Today is one of those days. That's why there's no buy signal there yet. It's such a low probability trade. It doesn't happen that often that I haven't put it into our signals yet. But nonetheless, our software told you to be buying the pound yen, and on days like this, you bought that breakout right here, you might have bought this pullback here, you might have bought this pullback, and you definitely bought the breakout here because it went sideways for 2.5 hours before that breakout. Now when it's above the upper band, the system still gave a buy here because it had about a 5 or 6 bar pullback, but these are pretty low probability. Typically when it's above the upper band, just wait for the momentum to run out, draw your fibs on the previous swing. Here's the next Fibonacci profit target level up, and as you can see, this is one of the biggest counter trend sell signals. There's the lower probability ones have tiny dots, and the higher the probability, the bigger the dots. When it's this far above the 3.0 band and above the 1 standard deviation daily statistical high, you get very big dots. Now this one is the biggest dot of all of our signals because it hit the 2 standard deviation high, which is statistically a 95% chance of reversal. And it was the high of the day. As you can see, it pulled back from that signal here significantly. But again, keeping things simple, let's just bring up some other charts on here. The Australian and New Zealand are also strong. The yen's the weakest. Let me just bring up a regular chart here. Australian yen is going to be going straight up, as you can see. And some of the trades you would take on this is breakout of yesterday's high. There's really 2 methods we use to get into trades: breakouts and sideways, rectangles, pattern breakouts and pullbacks. And really, this is the first pullback. The first pullback after a breakout is very high probability, probably 70%, 65% likely to work. This one's not enough of a pullback. This one here is. And you always want to draw your fibs to get an idea of where the market's going to go, and you can see it went right somewhere between the first and second fib target is where it usually stalls. And then after a while, after 10, you can see the Australian was no longer strong. It started to lose its strength and became somewhat weak, during that move. After, you can see around 12:30, it started to get strong again, and that trend continued. So, it was going up most of the morning, pulled back significantly, hit the daily statistical low, and anytime it goes beyond the upper level, if it pulls back and hits the daily statistical bottom, that's a very high probability trade. I need to make notes to put that trade in there, to put that buy signal in there. It's a very rare trade, and that's why I haven't put it in there. But just speaking from trading for 5-6 years of Forex markets, these range projection tools have been in the software from day one, going back about 9 years. I use them for stocks, futures, and Forex, and this works in every single market. Anytime the market's so strong it goes beyond the daily stat high, and this one came really close to the 1 standard deviation high, during the pullback, if it hits the stat low, you're going to get a move up. Now notice the statistical low of the day starts down here, and as the price goes up, gets yanked up. And that's why this trade works so well. It's not hitting the beginning of the day stat low. It's hitting how much it normally moves in a given day projected from the highest high is right here. Now if you notice the pound yen, it went beyond the 1 standard deviation high and actually was very close to the 2 standard deviation high. This distance right here projected from the 1 standard deviation high, you can see it's pretty much where it went. This is a 95% likely high, and I have patterns in there looking for sell signals within I think 8 or 9 pips of this 2 standard deviation high. It's close enough. A lot of times it comes within 2 or 3 pips, and then like you can see here, fell 70 pips. Now the third one, we showed the Australian yen, the pound yen. Now let's take a look at the New Zealand yen. And again, this is just going straight up. And this is an even higher probability because yesterday it made a spike up right before the midnight session, or right before the U.S. Session closed, and hit the 1 standard deviation high, pulled back, and then continued. And that's why anytime you get into a counter trend trade during the day, if it doesn't pull back before the next trading day, the day starts at 6 p.m. Eastern time. If you don't get a pullback, a decent sized pullback before then, typically the trend will continue, and that's exactly what happened today. Also note that this one also went above the daily statistical high, and during the pullback it came real close to the new daily stat low projected from the highest high. You can see we yanked it up. As price goes up, we yank the lows up. Big move up here, pull back again, another 30 plus pip move up. So keep those in mind if you're looking for very high pro. If you see a currency that's been going up all day and that has a sharp decline, put our range projection on the chart. Look at the 1440 minutes, which is how many minutes in a day, and it will give you the daily stats projected from the highest high. As it goes up, as you can see, the low goes up and the 1 standard deviation low goes up as well. On days where the market goes down, obviously we yank the high down with it, and that's why this is so powerful. And a lot of our counter trend tools, by the way, are based on those statistical daily 4-hour range and so forth. The higher the probability of reversal, the bigger the dot. Now, again, today, one of the reasons, if you want to know why today went up so far, is because it was a 10-day new high. And this is one of those things that doesn't happen that often. I'm putting it into our signals to avoid some of the premature counter trend trades. Let's bring that up real quick. Anytime you have a 10-day or 20-day new high, you can see if you go back from before today, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, the high of the previous 10 days was right here at 128.20. So anything above that 10-day max high, which really broke out starting around midnight here, it broke the 10-day new high right here, and it was off to the races. Pretty much nobody came in and shorted this until it hit the 2 standard deviation statistical high within about 4 pips of that level, and then it fell off, dramatically. So stats are very key. I'm a firm believer in them, mainly because I think the biggest traders in the world use them, hedge funds, corporations that manage billions of dollars of currency transactions, governments, they all know typically all the statistics on how far each currency moves during the day, and these are, at extremes they will exit their positions, which is why it pretty much came within 2 or 3 pips of the 2 standard deviation high today, and then fell about 75 pips very quickly. So when a currency goes up too much, it frequently does come down what many people would consider too much. This was such a strong trend up. You might not want to buy this pullback here, but you would probably, most new traders would probably think this is a decent pullback. It's going to go up again. But no, it's not, because it made a 2 standard deviation high. The move's over.